Beyond indicators, the power of price action. Most people come into trading looking for certainty. They want a tool, a signal, or a formula that tells them exactly when to buy and exactly when to sell. They scroll through charts filled with colorful indicators, oscillators stacked on oscillators, arrows pointing up and down, alerts flashing, and strategies promising accuracy rates that sound too good to be true. And for a while, it feels comforting. It feels like control. It feels like progress. But then reality shows up. Trades don't behave the way the indicators promised. Signals come late. Entries feel rushed. Stops get hit before the move actually happens. Profitable runs are cut short because an oscillator says overbought. Losses grow because another indicator says just one more candle. Confusion sets in. Frustration builds. And eventually, many traders ask a quiet but powerful question. What am I really looking at when I stare at a chart? That question is the doorway to price action. Price action is not a strategy you plug in. It is not a system you download. It is not a secret formula hidden from retail traders. Price action is simply the raw story of the market, told through price itself. It is the direct interaction between buyers and sellers, visible in every candle, every swing, every rejection, every breakout, and every consolidation. When you strip away indicators, you are not removing information. You are removing noise. What remains is the most honest data the market can offer, where price moved, how it moved, and how participants reacted. Price action teaches you to read the market instead of asking the market to give you answers. Think about this for a moment. Every indicator you use is derived from price. Moving averages, RSI, MACD, stochastic, Bollinger Bands. All of them are mathematical interpretations of past price data. They do not exist independently. They lag behind. They summarize what has already happened. Price action, on the other hand, is happening now. When you learn to read price directly, you stop reacting late and start anticipating behavior. Price action begins with understanding structure. Market structure is the backbone of price action. It is how price organizes itself as it moves. Higher highs and higher lows define an uptrend. Lower highs and lower lows define a downtrend. Sideways ranges define consolidation. These are not theories. They are observable facts. In an uptrend, buyers are in control. Demand consistently overwhelms supply. Each pullback finds support at a higher level, and each push upward breaks previous highs. In a downtrend, sellers dominate. Supply overwhelms demand, and price struggles to hold rallies before making new lows. Most traders complicate this with indicators when the truth is already visible. If price is making higher highs and higher lows, your primary job is not to predict a reversal. Your job is to align with that flow until the structure changes. Structure also teaches patience. Price does not move in straight lines. It breathes. It expands and contracts. Strong trends are made of impulses and corrections. Weak traders chase impulses. Strong traders wait for corrections. When price pulls back within a trend, that pullback is not weakness. It is often opportunity. It is the market testing whether buyers or sellers still have strength. Price action traders watch how price behaves during these pullbacks. Are the candles small and controlled? Are wicks rejecting key levels? Is momentum slowing without structure breaking? These details tell you far more than any indicator crossing another indicator. Support and resistance are another core pillar of price action. Support and resistance are not magic lines. They are areas where market participants previously made decisions. They represent memory. When price approaches a level where buyers previously stepped in aggressively, those buyers remember. Sellers remember too. Some want to defend positions. Others want to exit. New participants watch these levels because they are obvious. This is why price often reacts at support and resistance even years later. It is not because of the line itself. It is because of collective human behavior. Price action traders do not draw dozens of lines. They focus on the most obvious ones. Major highs and lows. Clear consolidation zones. Areas where price moved away strongly. These are zones of interest, not exact prices. When price returns to these zones, the question is not, will it bounce or break? The question is, how does it behave here? Does price slow down? Does it print rejection wicks? Does it consolidate before moving? Does it slice through with momentum? The answer to that question is your edge. Candlesticks are the language of price action. Each candle tells a story of conflict between buyers and sellers within a specific period. The open shows where the battle began. The close shows who won. The wicks show rejection, hesitation, and failed attempts. A long bullish candle closing near its high shows strong buying pressure. A long upper wick with a small body shows rejection from higher prices. A series of small candles shows indecision. A sudden large candle after consolidation shows expansion and commitment. Price action traders do not memorize candle patterns like flashcards. They understand context. A pin bar at random means nothing. A pin bar rejecting a major resistance level after an extended move means something. Context gives candles meaning. One of the most powerful shifts you will experience when embracing price action is the move from prediction to reaction. Indicator-based traders often try to predict where price will go next. They rely on signals that promise foresight. Price action traders accept uncertainty. They wait for confirmation through behavior. Instead of asking where will price go, they ask what is price doing right now. This mindset reduces emotional pressure. You no longer feel the need to catch tops or bottoms. You wait for structure to form. You wait for confirmation. You let price prove itself. Breakouts are a perfect example. Many traders fear breakouts because they get trapped. They buy the high, price reverses, and they feel fooled. Price action traders understand that not all breakouts are equal. A breakout after tight consolidation with increasing momentum is different from a breakout after an extended run. A breakout with strong closes beyond resistance is different from a wick that pokes above and immediately returns. False breakouts are not traps. They are information. They show where traders were wrong and where the opposite side may take control. Price action teaches you to see failed moves as opportunities, not mistakes. Risk management becomes clearer with price action. Indicators often give entries without logical stop placement. Traders guess. Price action gives structure-based stops. You place your stop where your trade idea is invalidated. If you are buying a higher low in an uptrend, your stop goes below that low. If price breaks it, the structure is broken. Your reason for being in the trade no longer exists. This clarity reduces emotional decision-making. You are not negotiating with yourself. You are following logic. Price action also encourages realistic expectations. Instead of aiming for perfect entries, you aim for favorable risk-to-reward scenarios. You understand that losses are part of the process. You stop trying to be right and start focusing on being consistent. Consistency is what separates traders who survive from those who burn out. Another major strength of price action is adaptability. Indicators are often optimized for specific market conditions. They work well in trends or ranges, but struggle when conditions change. Price action works in all environments because it is based on behavior, not formulas. Whether the market is volatile or quiet, trending or ranging, price action adapts. You read what is happening instead of forcing a setup. This adaptability builds confidence. Confidence in trading does not come from winning every trade. It comes from understanding why you are taking a trade and accepting the outcome. When you trade price action, losses hurt less because they make sense. You can review them objectively. Was the structure valid? Was the level respected? Did price behavior change? This turns trading into a learning process instead of an emotional roller coaster. Price action also simplifies your chart. A clean chart is not just aesthetic. It affects your thinking. When your chart is cluttered, your mind is cluttered. When your chart is simple, your focus sharpens. Most price action traders use naked charts or minimal tools. Maybe a single moving average for context. Maybe session highs and lows. But price remains the star. This simplicity forces discipline. You cannot hide behind indicators. You must engage with the market honestly. One of the most overlooked benefits of price action is patience. Because price action relies on confirmation and context, it naturally reduces overtrading. You wait for price to come to your levels. You wait for behavior to align. You accept that no trade is also a decision. Patience protects your capital and your psychology. Many traders fail not because they lack knowledge, but because they lack restraint. Price action trains restraint. It teaches you that the market does not owe you a trade. It teaches you to wait for high-quality opportunities instead of forcing activity. Over time, this patience compounds. You start noticing subtle shifts in momentum. You recognize when a trend is weakening before indicators catch up. You see when consolidation is about to expand. You sense when a level is likely to hold or fail. This is not intuition. It is pattern recognition built through screen time and intentional observation. Price action mastery does not happen overnight. It requires study, practice, and reflection. It requires reviewing charts, journaling trades, and asking honest questions. It requires humility. You will misread price sometimes. You will enter too early or too late. You will hesitate. That is part of the journey. But unlike indicator dependency, price action grows with you. The more you observe, the sharper you become. The market starts to feel less chaotic and more conversational. You begin to understand its rhythm. Price action also aligns deeply with psychology. Markets move because of fear, greed, hope, and regret. Price action shows you where those emotions manifest. Sharp reversals show panic. Slow grinding trends show confidence. Long wicks show rejection and doubt. When you learn to read these emotional footprints, you stop fighting the market and start flowing with it. This emotional alignment reduces stress. Trading becomes less about adrenaline and more about execution. Beyond indicators, price action empowers independence. You are no longer reliant on settings, parameters, or proprietary tools. You can open any chart on any time frame, in any market, and read it. This universality is powerful. Stocks, forex, crypto, indices, commodities all speak the same price language. This means your skill is transferable. It also means you are less vulnerable to market noise, hype, and misinformation. You trust what you see, not what someone claims. As you grow with price action, your goals may change. You may stop chasing fast profits and start building consistency. You may trade less and earn more. You may prioritize longevity over excitement. This is a sign of maturity. Trading is not about beating the market. It is about understanding yourself within the market. Price action reflects your discipline back to you. If you rush, it punishes. If you wait, it rewards. If you ignore context, it exposes you. This feedback loop accelerates growth. Eventually, you may still use indicators, but differently. Not as crutches, but as supplements. You may use them for confirmation or filtering, not decision-making. Price remains the decision maker. That is the power of price action. It brings clarity where there was confusion, confidence where there was doubt, simplicity where there was complexity. It does not promise certainty, but it offers understanding. It does not eliminate losses, but it makes them meaningful. If you are willing to slow down, observe, and respect what the market is showing you, price action will teach you more than any indicator ever could. The market is always speaking. Price action teaches you how to listen. And once you truly listen, you stop chasing the market and start walking with it. That is where growth happens. That is where consistency is built. That is where trading becomes not just profitable, but sustainable. Trust the process. Trust the structure. Trust the story price is telling you. Beyond indicators lies clarity. Beyond indicators lies confidence. Beyond indicators lies the power of price action.